Hey everyone, and welcome back to the channel. What if I told you there's a company that essentially profits from car accidents, floods, and hurricanes? A business that thrives in good times and bad, with a near-monopolistic grip on its industry. Today, we're doing a deep dive into a company that is not so well known outside of the value investing community, called Copart, with the ticker symbol CPRT. It's a fascinating company that operates a massive online auction house for damaged and salvaged vehicles. Think of Copart as the eBay for wrecked cars. They run a massive two-sided marketplace. On one side, you have the sellers. This is mostly insurance companies who have cars that's been totaled in an accident. Instead of just scrapping it, they list it on Copart to recover some of that money. Other sellers include banks, car dealerships, and rental fleets. On the other side, you have the buyers. These are professional dismantlers looking for parts, rebuilders who fix up cars, and a huge network of international exporters who ship these vehicles all over the world. Copart sits in the middle and collects fees from everyone. Copart also makes money from add-on services like towing, delivery, shipping, storage, and handling paperwork such as title transfers and export docs. Basically, they take all the hassle off their customers' hands. Copart is expanding internationally, operating in over 11 countries, with exporters being a major source of growth. Copart's business model has created a powerful competitive advantage, or what investors call a moat. And Copart's moat is deep and wide. Here's why customers are locked in. First, network effects. Copart has over 1 million registered buyers in more than 190 countries. Sellers, especially big insurance companies, know that listing a car on Copart will get the most eyeballs and the highest possible price. More buyers lead to better prices, which attracts more sellers, which in turn attracts even more buyers. It's a virtuous cycle that's almost impossible for a competitor to break. Second, deep integration with insurance companies. Insurance companies are their biggest suppliers. Copart has spent decades integrating its systems directly into the insurance claims process. For an insurer, switching to a different auction house would be a massive operational headache for a worse result. The switching costs are incredibly high. Copart also pioneered 100% online auctions with their VB3 platform, making global bidding seamless with features like translation and currency conversion. Copart's vertical integration is a big differentiator. They own fleets, storage yards, and provide end-to-end solutions. For insurers, that's far more convenient than dealing with multiple smaller vendors. Scale is another big advantage. With over 200 facilities worldwide, Copart spreads its fixed costs and keeps pricing competitive. And the larger they get, the harder it becomes for competitors to break in. And finally, Copart's global reach is a moat in itself. Around 30 to 40% of U.S. vehicles are exported overseas, and Copart has spent years building the relationships, logistics, and legal know-how to make those cross-border deals work. That's something other auctioneers just can't match. Looking at fiscal 2024 results, service revenues grew by about $363 million, or 11.3%. In the U.S., growth of $285 million came mainly from higher volumes and fee optimization. Internationally, revenues grew $78 million, with most of it from volume growth, though pricing was slightly weaker. Vehicle sales revenue was essentially flat, up just $4.4 million, with U.S. sales falling but international sales growing. Overall, services are clearly the stronger growth engine. Over the long term, Copart's revenue growth has been consistent, and margins have stayed stable, showing a durable competitive advantage. Return on invested capital has looked weaker recently, but that's largely because Copart's cash and short-term investments have ballooned from $477 million in 2020 to $4.4 billion today. If you strip out the cash, ROIC has actually doubled since 2014, reaching around 28% in 2024. What's next really comes down to how management puts that cash hoard to work. If history is any guide, they've been good capital allocators, so chances are we could see some positive surprises. Using a simple DCF with a 10% growth rate, I estimate fair value at about $42 per share. The current price, as of August 29, 2025, is $48.80, so the stock looks slightly overvalued with little margin of safety. Given that the assumptions aren't overly conservative, I'd personally prefer to wait for a better entry price before buying. I would like to say here that valuation is never an exact science. Tweak the growth or terminal value assumptions slightly and you'll get a different number. I'm curious what you think, so please share your views in the comments below. Next, we move on to the price multiple analysis. Looking at the snapshot, Copart's current EV to sales stands at approximately 9.4x. The analysis suggests that the estimated trough or low point is around 7.7x, a level last observed in 2020 and 2022. If the market re-rates the stock to this multiple, it could imply a target price of roughly $41 per share. Of course, nothing is set in stone. The target price may shift slightly depending on how the multiple is drawn, but this range is generally considered a reasonable zone for potential entry. To sum up, here's the investment case. On the positive side, Copart is a top-tier business. It's growing at around 10% per year, delivering an ROIC of 28% and maintaining stable, high margins. On the negative side, the price isn't right. At nearly $49, the stock is above my fair value estimate of $42. My plan is to wait for a better entry point. The key catalyst to watch is how management deploys that $4.3 billion cash pile. If they allocate it wisely, it could unlock significant shareholder value. And that is all I have for you this week. What do you think about the Copart's future and its valuation? Let me know in the comments below. Don't forget to like, share, and subscribe for more content like this. Thanks for watching, and I'll see you in the next video. Bye.